Hi, this is Lara from Pure Elliott Wave with an updated Chainlink analysis for you. I'm working through my list of what you voted for, and this is number 3. This was my last analysis of Chainlink, and I was considering what if cycle wave 2 was over down here in June 2023, and I had this channel around cycle wave 2, and I was wanting the upper edge to be breached by a full daily candlestick above and not touching it to have confidence that this downward bear market was over and a new upward bull market was underway. So we've got a really clear breach on the weekly chart, so I'm going to label that structure of cycle 2 incomplete. I'm going to just put a label in here of a double zigzag. That's what it looks like overall, most likely. And I would say W, X, and then Y probably. But I want to focus my Elliott Wave work today on trying to identify what's happening in this new upward movement, because if this channel has breached, then it's telling us this bear market labelled cycle 2 is over and cycle 3 may be in its early stages. Before I go down to the daily chart to do that, let's have a go at trying to calculate a potential target for cycle wave 3. Within cycle wave 1, primary 3 was 46.979 times the length of primary wave 1. It was just a little bit short of that. That's an extreme Fibonacci ratio, so let's use that Fibonacci ratio and apply it between cycle 1 and 3 to see what kind of target we'll get. If cycle 3 reaches 46.979 times the length of cycle 1, that would be achieved at 2,489. This is not a coin that I've purchased any of, but if I had, I wouldn't be using that target for my own purposes. I'll be focusing on using Elliott Wave and classic analysis to identify the end of cycle 3 rather than any target. So for my own purposes, this would be an idea of what's possible for this market based on this past price behavior. Okay, let's have a look on the daily chart and let's focus in on what's happening here from the end of cycle 2. Here's the end of cycle 2, which in my last analysis I labelled complete. First up, I'm going to move the degree of labelling within primary wave 1, what's happened so far, up 1 degree. And I'd be open also to moving it up 1 degree even further. I could consider that this could be primary 1 and primary 2. If primary 3 is going to be a really long extension, it may have started with a really short primary wave 1. But for now, let's just label this intermediate wave 1. Okay, no, I want to label this over here. That looks terrible. And this can't be correct because 4 may not overlap 1 price territory. So let's leave this down here and let's label this. Maybe 5 is an ending diagonal. Let's try that first. Checking the wavelengths, 3 is longer than 1, 5 is longer than 3, and 4 is longer than 2. But 2 actually needs to be over here. Yeah, 4 is still longer than 2. The trend lines must diverge. Yeah, they do just. Okay, so that's actually okay. So let's just put that single zigzag back in here. Now there's nice alternation between 2, a sharp zigzag, and 4, an expanded flat. Now let's see if the structure of intermediate 3 could be complete. Could be. 4 could continue further. I'd label 2 as a double zigzag. I'd label 3 as a complete impulse. That looks pretty good to me. And 1 doesn't really matter because it's obviously over, but yeah, that looks okay. An extended 5th wave. Oh, is that not going to work? No, oh no, actually this works up here. Doesn't look ideal. I'm going to leave the labelling of 5 out of there. I like the labelling of -3, a complete impulse. I'm not sure about all this choppy overlapping though for -5, so if we label -4 over here, I know the proportions here don't look great. 4 is a lot more brief than 2, and it's the proportions between 2 and 4 that give a wave count what we call the right look. But you have to understand the right look is going to be different for different markets. I've long been used to seeing commodities, because I've analysed gold for a very, very long number of years, I'm used to seeing gold have fourth waves that are more brief than its counterpart second waves. Cryptocurrencies behave like very extreme commodities. It's well known amongst traders and investors that commodities are very extremely volatile. They'll particularly produce blow-off tops in bull markets. And when they do that, that strong upward movement forces the fourth wave that comes just before them to be more brief and shallow than its counterpart second wave, giving the impulses a three-wave look. And disproportion between the fourth wave and the second wave, that's just a long way of saying this is absolutely normal for a cryptocurrency. The volatility of cryptocurrencies is even more extreme than commodities. So it's really normal to see a fourth wave that is much more brief than its counterpart second wave. So this looks fine, but it could also be this, and that would explain the overlapping. I'd have A here, B some kind of probably double zigzag, and it's, let's take this off a semi-log scale, it's a 116.5% of A, put on the semi-log scale again. That makes a difference to the percentages, that's why I did that. So could handle that. So we could need C to move below the end of A, so a new low at least a little bit below 10.39 before a final fifth wave up to complete intermediate wave 3. I think actually for this one, I like that idea best. The invalidation point for that idea is here at the end of minor wave 1. Minor wave 4 may not move into minor wave 1 price territory below 8.264. If this invalidation point is breached, then I'd label primary wave 1 complete, and downward movement would be primary wave 2. And the invalidation point for that idea is down here, 4.929. But so far, it doesn't look like there's a complete 5-wave up structure for primary wave 1. So I'd label that incomplete as most likely. And here's the short-term invalidation point. Let's have a look and see how much technical support there is for this Elliott Wave count, which is very bullish. And here's a chart that I've already prepared for you. On the weekly chart, the low of June 2023 looks very likely to be held for quite a long time now. There's a bullish candlestick reversal pattern here on the weekly chart. These three candlesticks, actually it's a morning doji star because this is a doji. The third candlestick for real confidence should have push from volume. In this instance it doesn't, but it's okay for a cryptocurrency because they do tend to have annoyingly weak volume off their lows, which is one factor that makes their lows really hard to identify. There's a big consolidation here. It had resistance at 9.5, support at 5.3. Last completed week, price broke above resistance on an upward week with push from volume. This breakout is really strong and clear, so let's expect support now at 9.5. I've identified an inverted head and shoulders. Here's the head, left-hand shoulder, right-hand shoulder, left-hand armpit, right-hand armpit. Draw your neckline really carefully from the armpits and extend it on out. The point at which that trend line is closed above is a break. It should have push from volume. It does on the weekly chart, and then calculate your target. Don't anticipate head and shoulders patterns when you think a head may be forming. Wait at least right-hand shoulder to form and then look for your breakout. Here's price approached the neckline, it found a reaction, moved down and away, and then breaks through. When price behaves like this around a trend line, it adds technical significance to the trend line. So this looks like a really good pattern. The target I calculate from this inverted head and shoulders is 11.59. Has that been achieved here? Yes, that's been more than achieved. So the target from the head and shoulders pattern has been achieved, so that's no longer in play. Price is broken above what was resistance at 9.5. If we see a pullback here, expect support now in that area. If price continues on up, look for resistance next at 15. Upward movement has really strong push from volume. This is the strongest volume we have had in many, many months. This is extremely bullish for Chainlink. Doesn't yet have to be stronger than back here in December 2021, that we're showing an increase here beyond November 2022 and beyond these downward sessions or weeks in June 2022. This volume here of October 2023 is stronger. That's enough for a very strong bullish case. It starts out slowly and then if a bull run is underway, as I expect it is for Chainlink, expect it to continue. On balance volume has a really strong range. When price was in that consolidation, on balance volume has broken above resistance. This is a very strong bullish technical signal. This supports the Elliott Wave count. ADX tells us that there is an upward trend at the weekly time frame in a relatively early stage. ADX has come from very low levels. It's risen up from below both DX lines. It now has a positive slope and is above 15. This is a very strong bullish signal from ADX. This strongly supports the Elliott Wave count. RSI is just nearly overbought. It can reach fairly deeply overbought and exhibit bearish divergence when this market has a strong bullish run. Money flow is still in neutral territory but pretty close to overbought. It too can reach deeply overbought and remain there for a long time when this market has a strong bullish run. ATR is now starting to show a little bit of an increase along with volume. Volatility is returning to the market. That is very good to see for a bullish case. Stochastics is entering overbought, but when the market is trending, I'll use ADX and RSI, not stochastics. At the daily time frame, here's that strong break above what was resistance at 9.4. It came with a push from volume, so that is good to see. We can have confidence in that breakout. Any pullbacks now, expect to find support about 9.5. The moving average situation has the short above the mid, above the long. They all have positive slopes and prices above all three. This is a full bore bullish look. Along with the golden cross is the 50-day moving average, that's the purple line, crosses above the 200-day moving average, that's green. So this supports a bullish case. It's a lagging indicator. I'll give least weight to these moving averages. I use them as a lagging confirmation tool, and here this is adding confirmation to a bullish case. Volume is extremely strong on upward sessions and declining as price moves sideways, but even within the consolidation, as price is slightly limping higher a little, we do still have further increases in volume. The bulls are returning to the market. This is really good to see. This is strongly supporting the Elliott Wave analysis. Last week's signal from on-balance volume in the daily time frame is also bullish. Now, I will read this as I will interpret this as saying it's unlikely we're going to get a pullback here. We're probably just going to get a sideways consolidation. Now, that's not definitive. We could get a pullback. I think it's more likely that we'll just get a consolidation. At this time frame, ADX is now very extreme. It's not as extreme as it can get for this market when it has a strong bullish run, particularly at the daily time frame, and there's no bearish divergence to note yet between RSI and price and between money flow and price. I'm not going to note this potential bearish divergence because a pivot has not developed at this equivalent point between price and money flow or price and RSI. Wait for pivots to develop. Here's a pivot. Here's another pivot. That's what a pivot is. Wait for something like that to develop before you note corresponding points in price and corresponding points in RSI and money flow or anything else to calculate if there is any divergence. I've learned the hard way over the years. Wait for the pivots in price to develop and pivot in RSI or money flow to develop. Compare matching points in time to look for divergence, because if you don't wait for the pivot, sometimes the divergence that you see will just disappear, and so to eliminate some of those false signals, wait for the pivot. That's it from me with an update for Chainlink. Very, very bullish for you. I hope everyone's having a lovely day.